Hi, everybody. It is January 20th, 2025, weekly forecast for this week ahead. So a little bit of shortened week with Martin Luther King Day here in the United States. Majority of the banks are closed, market closed early, so there's no trading done. That's why there's no live stream today. We also had the inauguration of a new president, Donald Trump. So a lot of things are really happening within the markets right now, and you have to be aware of that. And I would be careful this week based on what I've seen so far today and the open of even today's new candle. I'd be very cautious of what we're going to see. So, really, what I want to make note of off the bat, usually I start with dollar index on weekly forecasts, then I'll go over through bonds and yields and foreign exchange, and I'll end off with S&T. But I kind of want to start off with S&T, especially when I get questions over SMT. I like to go over the weekly forecast, or at least start it with it, because if you look at what ES has done comparison to NQ, which we could pull those aside, and we'll go over to NASDAQ, excuse me, we'll go over to NASDAQ, and that's going to show on the daily time frame that there is some type of S&P divergence there. And if it's on a higher time frame, that can mean a whole lot. Also, if it's still within its boundaries in terms of order flow, that means a whole lot. And what does that mean? Well, when we look at NASDAQ, NASDAQ for one has not closed above the mean threshold of this bearish order block here. So closing above a mean threshold of a bearish order block, mitigation block, breaker is a very huge tell that those are probably going to fail, and it's probably not the right order flow, and you're probably not, on side. You can also look at this premium sell side imbalance reclaimed that we've stepped up into again, which is all resting inside of a premium. Now, if you take a look at ES is going up inside of its reclaimed sell side imbalance, which is here, right? So that's going inside of its reclaimed sell side imbalance while it's also making a higher high above this high right here. So I'll take these, or at least move this over so you can see it. We'll put this on here. If you look at Monday, January 6th, look at your NASDAQ chart to the right. NASDAQ has not made that higher high, right? So it's failed to make that while being inside of these bearish PD rate order flow, right? So the fact that ES is still within the sell side of balance, that's within a premium relative from that dealing range high all the way to this low, that's still within a premium. Now, this is just a signal or a potential tip of the hat, or and I foreshadowing really of maybe seeing lower prices. Maybe this could also just extend higher. ES could extend higher again, but it's something that I'm observing, I'm watching, I'm seeing if evidence will grow in that favor, and if it does, then I would stick with the onside that I would expect lower prices out of it. Now, we have a lot of things going on, especially with the inauguration, and this week with coming off of a holiday, which is today, going into tomorrow. It's going to be a lot of interesting price action to say the least. So, just to be aware of that. I really don't have a huge idea for dollar index and things like that. Dollar index is opened off lower, and that's because of what we had today in terms of the inauguration. We do have some sell side that's resting underneath here. That's within this buy side imbalance. So it's still within its boundaries. Even if it took out the sell side, it could still stay within that buy side imbalance and still remain heavy to the upside. But you can also look at the flip side on the weekly, where all we've done is trade basically up into that weekly sell side imbalance, which is inside of a premium. And then do we see a cascade lower on dollar index? And why are we looking at this? What's the point of it? Well, we're kind of in between two biases where this could be a potential retracement to go higher again, or this could be an outright reversal on the weekly time frame to extend off lower. Now, if either of those are true, then we have to really start looking at NQ really closely, especially what the daily time frame is doing and even the weekly. We're trying to gauge what really it's trying to extend for, right? What is the real true drawn liquidity? And if you want to make it simple, is it this high here, right, above the daily time frame bearish order block? Is it above this high here, the buy side liquidity that's resting there? Or is it this low down here? When we talk about narrative, when we talk about bias, when we go into intraday charts on 1 minute, I can trade completely against whatever this order flow is doing. I can trade completely against it, doesn't matter. But it is a good framework, especially if you're in line with it and the setup presents itself that you're in line with the higher time frame order flow. It's a very good high probability setup. Of course, you can still go against these order flow things in a higher time frame, but if you know where you're at, that's a good idea. And you know exactly where you're at all times, and even if you're trading against it, it may just be a retracement in lower time frames. You know exactly where you're at. So to make it simple, is it going to trade to this high, or are we going to trade down to this low? Well, again, the things I'm stating doesn't give me a whole bunch of clarity. I have some ideas on the bearish side, on the bullish side. I mean, again, dollar index is not necessarily helping in terms of intermarket relationships. I can't really gauge right now because I can see kind of a two-sided argument on this where we could drop away from the sell side amounts. We could see lower prices from dollar index. And what does that mean? Well, then I would have to anticipate possible higher prices out of NQ, right? Um, if dollar index just drops lower for a retracement to extend higher again, then this whole thing would drop off lower. So you're in one of those situations, or at least prices in one of those situations where it's not a very clear narrative because there's not a lot of things that are stacked on one side that's very favorable. When we talk about like super high probability setups or favorable conditions, it's where all the evidence is kind of stacked on one side and you can really see it drawing towards a certain side or not. Are we closer to this buy side liquidity pool than we are to here? Yes, but again, we're still inside of a premium and still within this PD rate, the boundaries of it. So I can't necessarily make that call that we're going to really run higher. It could drop lower from here. So even the weekly time frame, it doesn't give me a whole bunch of clarity. We in terms of a bullish perspective, we could have dropped lower as a retracement into this reclaimed bullish order block, which is here. We could have dropped into that, and then do we see an extension higher? We very well could. And if you look to the left of you, that is also a inversion for value gap that's resting right here. So we could have dropped into that as well. So there's a few ideas. I mean, on the bearish perspective, when I'm looking at a weekly chart, I don't have a whole bunch of evidence, to be honest. I really don't. The only thing is we're basically closed beneath this inversion for value gap. And if we see an extension lower, that could mean something as well. Monthly doesn't give a whole bunch of data as well. That's the reason why I don't really pay attention to it as much right now. And again, the daily time frame, we'll just have to see. I mean, if we close above this high here, then that makes it an easy argument, especially if we see dollar index falling lower, we see bonds and yields in line and foreign exchange, then we can start making the argument that we want to head towards this high here, potentially run for the all-time high. But right now it's in a 50-50 state in my eyes. I mean, I can't really make that call with a great deal of certainty. Looking at the 4-hour structure, we've created relative equal highs here, which that could be negated, meaning it could be not traded to because of S&T there. We also could have been just simply retrading to this reclaimed inefficiency, which is here, right? The sell side imbalance to the left of us. So even if there's relative equal highs, that's not 100% certainty. That's why sometimes relative equal highs are left. They're not going to be traded to, especially paired with S&T or price retrading back inside of a previous dealing range, premium or discount. That could be a sole reason why it doesn't trade to the relative equal highs. Could it very well trade to the relative equal highs? Yes, that's a very well argument. Well, CJ, how do I know? Well, you're gonna have to figure that out in a session and see what evidence it's giving you and make the decision, take the trade, and if it doesn't pan out, then it is what it is. But that's why we trade off of probabilities and variables, and you have certain models, especially yourself. You in and of yourself are a model. You are a model, and your own perspective is a model. You're gonna have certain days where you read the market correctly, and some days where you don't. That's just a variable within and of yourself because you are a variable. You have probabilities that exist within you because your perception is going to be not always 100% correct. That's why some people, comment at me, well, you read the market incorrect, you're stupid or you're dumb. No, I just know that I'm a human and even with all the knowledge I have, I'm going to read it incorrectly in the moment of time at times. It just is what it is. And there's going to be days where I read it correct and you don't read it correctly. So, and that's where experience and time and looking at all these concepts, of course, you're going to end up reading the market correct more than you're not. But at the end of the day, you can't 100% be correct all the time. It's impossible. Um, Again, I'm just pointing out, if you see what I do in my videos, see what I do in the live streams, I'm always looking at both sides of the board. I'm always looking at both perspectives. I'm looking at it, I'm gauging it, I'm trying to gather evidence. And if I don't see super clear evidence to really make a case for one side, then it's very difficult for me to want to trade because I don't really know what the hell it wants to reach for. So in that sense, I'm just gambling. I'm just trying to guess and try to get lucky. I mean, that's not very probable, right? That's not a business model. And that's to me where, if I'm taking trades like that, then I'm not working within a model. I'm just working within luck and trying to gamble essentially. You see today we had this massive open drop lower into this discounted buy side imbalance. So there's some decent structure here in terms of bullish structure. I mean, if you look at the stealing range here and read the bullish order flow, we dropped down in here last week. Buy side imbalance, we utilized the new week opening gap. We extended higher. We dropped down in this discounted buy side imbalance. We extended higher, made a new high above this previous high. We dropped right back down into this previous new day opening gap. Buy side imbalance that's resting in there. And we could potentially extend higher into the sell side or buy side liquidity, which is above us. But at the same time, as I mentioned, the other argument, that's where you could see that never traded to price fail and drop lower. And in that instance, some people may look at that perspective the way I look at the view the market and say, well, that's confusing. I don't want to look at multiple perspectives. I just want to look at one. Well, to me, that's just turning a blind eye and sticking your head in the ground and saying, look, I don't want to look at the other perspective. To me, I'm looking at both perspectives and I'm trying to gauge which one has, better probabilities and odds of working. And if I see a model that's placed within time and it seems correct, then I execute on the model and I don't worry about the outcome because I know if I just keep doing that over and over and over time, eventually I'm going to be correct. There's going to be times again where you're just not reading it. Market conditions may be shitty. You may be in a shitty state where you're just not reading things correctly. And it just is what it is. You have to accept that we are a variable person, meaning we're changing all the time, and same with the market. So if you just remain as far as looking at the model and executing the models correctly, that's where you'll find the success. So this sell side imbalance, we closed above it. We failed to really use it as an inversion because of the buy side imbalance that's resting underneath it, but it's still something I may utilize going into tomorrow and the rest of the week since it's in that general area. But for now, all we've done is just drop down into this buy side imbalance. So from this dealing range low, where the move started, up to that high, we drop down into a discount. Equilibrium's here. We drop down an optimal trade entry, and we could see an extension where we see higher prices out of this. Again, if we drop beneath, CJ, how would I know when to start looking for lower prices? How do I know if we're not going to trade to the buy side? Well, if I see price really failing to extend higher, we're breaking all lower time frame buy side models and PD rates and for value gaps, and we start extending lower even beneath this buy side imbalance. We drop beneath this, we close it. Then I would have to look at the idea of we're going to run to this short term near-sided sell side liquidity, which is here, right? That's very clear. In this moment in time, I can't make that argument. I have some tip of the hands foreshadowing where that could happen, but I don't know that for certainty right now. If I see the evidence where it wants to really gravitate towards the buy side up here, then I'm going to execute on the model and see what happens. And that's again, this type of mindset to me is what I wish I was taught. You can all know all the technicals in the world. You can try to figure it out, and to me, trying to perfect that and trying to know exactly once you give that idea up, being the best trader of ICT and knowing every single, to me, it's exhausting. I don't need to know that. Let me just play off the probabilities and the variables in my model, and I'll end up profitable. I don't care about being perfect all the time. I don't care about getting the model or the bias correct all the time. It just is what it is. Hindsight, I could go back and plenty of times and look at price and go, well, even Friday where, I took a loss on a short, I can go back in hindsight and be like, oh yeah, this, I could trade this all the way up, but I didn't get the bias right in the moment of time. And that's again, just you being human and it is what it is. I mean, I can't perfect that. Of course you can get better and learn at it, but there's just going to be times where you don't read it right and it is what it is. So in here, I mean, we'll see what tomorrow presents. Some buy-side liquidity is generated up there, but we've had a massive drop lower off of today's open of the daily candle. Again, this is due to the inauguration and everything with presidency and stuff like that here. So your homework would just be to look at foreign exchange, take a look at your weekly charts on foreign exchange, EU, GU, AU, NU. So Aussie dollar, pound dollar, New Zealand dollar, Euro dollar, looking at all of those and trying to gauge what they're doing and then to look at bonds and yields and kind of gauge what they're doing as well. Pay attention to them all week. It's not something where I'm only going to look at for today. It's probably going to be the rest of this week and trying to gauge what the long-term vision and view is of NASDAQ. So that's really going to be it for tonight's video. And until tomorrow morning, good luck and good trading, everybody. Be safe.